Welcome back. If you were with us for the first section of this webinar, or this is your first visit, whatever it is, it's lovely to have you back again. But as always, before we start, can I just draw your attention to the disclaimer that I know you can see on your screen? As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. So before I pass over to David, just take that down and push back we're talking about the euro dollar. No, sorry, euro Aussie. Euro dollar was yesterday. Looking at the weakness and looking at the 5-minute chart in particular together with the Renko. And as I said, so I explained the VPOC, the volume point of control, is that area on the chart. It's like a sort of value area. It denotes a congestion phase. It's where you have transacted volume. There's no clear direction, and it's one of those areas that after a move, either upside or downside, and you have this pause point, you then have to wait to see whether you're going to have a continuation of this very nice primary trend lower, or you are going to get a reversal off this level. And we left it with attempts to move higher, reasonable volume underneath the moves. What's happened is we've also had a trigger of we had a volatility trigger where there's momentum coming into this particular pair, and we don't have a volume based level that's appeared yet. We want a level like this from the volume point of control. All that's just been put in at the moment. So with once a volatility trigger is triggered, then a volatility candle is triggered, sometimes we can get reversal or further congestion. The Renko, which takes out all the noise, has actually remained. It just absorbs everything, and we just have to wait and be patient. And as I explained, where it is heading to, much important to know, is we go through the different time frames, and certainly on the hourly chart, the 4-hour chart here, we do have some support coming in here. And looking at the hourly chart as well, it seems to be moving quite nicely. Then we're actually coming up to the levels that I mentioned in the previous bit of this webinar. Right. I'm going to keep a hold of that, looking at what's going on here. If you've got any questions, just pop them into the chat box. Happy to answer them. But in the meantime, let me pass you over to David, because I think he's looking at the euro, but I think against the Canadian. Indeed. Right.
Hi everybody, hopefully you can see my screen. I've got Anna's been on MT4. I've got Ninja up here. I've got Trading View, and I've also got Trade Station down at the bottom here. So I've got a full complement. Let me just move the chat box out of the way. Good to see you all. And I've got dollar CAD here, but I actually wanted to start with here we are, Euro CAD. Because we've been on euro, very much on the Canadian, pretty much since the start of the session. And if I was going to draw a schematic of two things really, continuation of the trend, or where to get into a trend if you've missed an early entry point in a trend, and secondly, it's sort of reversals based on VPA, then this is a classic example. You've got the time frame down here at the bottom. So, and bear in mind at the moment, we are literally, 8 minutes into the US Open. So we are seeing volatility. The indices will be racking about all over the place. The automated EAs will be getting in there, the algos, and that is what is going to cause the volatility for the next 5, 10, 15, 20 minutes. And that will ripple out across all the markets, irrespective of whether it's Forex, whether it's stocks, whatever it is, indices, what have you. But I wanted to start with this. This is over at 7 o'clock. This is UK time, so 7 o'clock Europe, 8 o'clock London gets underway. And this is something you will see a lot. You will see this where the market is setting up for some sort of reversal. because it is hugely profitable for the market makers, and crossovers are classic points in the trading day. They come with monotonous regularity. Everybody knows where they are, and yet it is one of the most profitable times for market makers. You will often see this. You'll see a rally in Europe in the first hour of trading, and then bang, as we go into London, the weight of the London market comes in and the whole thing is reversed, and that is seen for what it is. You know, it's a pretty flimsy trap. But really what I wanted to highlight here was, first of all, entry points and re-entry points, if you like. The move gets underway, we're looking at the volume here, and then we get this massive explosion of volume under this particular candle. Now, you know, that can only be a sign of weakness. In this case, it just continues lower almost instantly. There is absolutely no guarantee in the volume price analysis methodology that this will always happen. You just have to be aware of the fact that what this is a very strong signal of forthcoming weakness. That forthcoming event may happen on the next candle, it may happen 5 candles later, but it is such a strong sign of weakness. It's like running a flag up a flagpole and saying, look, I'm pretty weak here. You know, you better do something, or at least be aware of what you're likely to be thinking about in the next 4, 5, 6 candles. So it just comes in, it's an unmissable signal, and on we go down into the price waterfall. Now, if you missed all this and you're thinking, you know, I'm getting, you know, I'm down here, so I've missed all this, maybe I was away from my desk, whatever, and you've seen this nice move going on, you know, where do you look to get back in again? And the sort of price action you're always looking for in a downtrend like this is efforts to rise. It's like this guy here. You've got decent volume under there. You know, is this a sign of strength or is it a sign of weakness? It's still a sign of weakness because the market is trying to rally, it's trying to buy into weakness, and it's crushed back down again under the selling again. These are just classic signs of where to get into. You will see these at all sorts of points in a downtrend. Sometimes you'll see a little bit of congestion build, and then maybe you'll get one at the end, and that's a nice point to get in. Maybe you'll see it here, or it came early in the congestion phase. Then we had some sideways, didn't really look like it was going anywhere. And in addition to that, if you look at the volume here, it's falling away. So the upside volume to you know, signal buyers coming in is hardly strong. It's weakening all the time. It's not particularly indicative of a major reversal. And then on we go down into the next phase. We get a similar sort of event here in the inverse, if you like. Now you're starting to see a little bit of buying coming in there, but you look at the volume to the upside, and this is the key with all of volume price analysis, but it is one of the more nuanced exponents of it, if you will, is that you're looking at the reaction, whether that reaction within a reversal against you in a downtrend is actually meaningful. Does it, in other words, does it have strength, or is it simply just a minor reversal, which we get in all types of markets all the time? It's what you're, and this is the problem when you're in a trend, when you've got a nice position in here and you see this coming in, you think, do I close out? Yeah, I better close out, take my profit off the table, and then you see the rest of the trend develop. It happens. It's the hardest thing to manage in trading. I don't have the trend monitor on this particular chart because I just wanted to keep it nice and clean, but you would have the trend monitor on here, and I can assure you the trend monitor at this point, it might have transitioned to a darker color, but it wouldn't have changed color. In other words, it was telling you, look, don't panic, just sit tight. I think this is only just a minor pullback, a minor reversal, and it's really just confirmed with the volume here, which is kind of falling away as well, because this line here, which is on the tick volume indicator, it just gives you a little metric of what is high, what is average, what is low. It's based off the daily time frame, and it's only there as a guide. It's not a concrete level that you can say, oh, we're above that, we're below. It just gives you it's like the 80-20 levels on the currency strength indicator. They are there to give you guidance, to give you a sense of when a currency is perhaps getting into overbought or perhaps getting into oversold. And it's a similar sort of thing here. It's just giving you a guide. You will eyeball all the time. I mean, this is coming out of Asia, obviously very low over here, But during the course of the day, you're going to look at candles and think, oh, this is high. That's very high. I've just had that candle there. It's huge, highest of the day so far. This one's a bit low in here. You look at all these things all the time. So it's just there to give you a measurement, if you will, a guide, no more, no less than that. So we carry on down. And then the next really key point is we get this really strong volatility trigger. We get a volatility candle here, and we get lots of volume coming in under it. Those two factors combined will tell you that the market makers are participating. Whenever you see volume and volatility, it means the market makers are participating. Now, on occasion, you will get volatility and very low volume, which tends to be a trap. It's a fake move, if you will. The price action has been moved with very little volume. But where you see high volume, they are playing for sure. And what you're expecting is either congestion or a reversal. In this case, we got the reversal. We got a lot of buying to the downside, signified by the deep wick to the lower body of the candle. The beauty of the volatility indicator is this, because if you were still holding this short position, that volatility, we're on 5 minute here. This is a 5 minute chart. So this volatility trigger would have come in. Now, I don't know when it came in. It could have come in after 1 minute, 2 minutes, 3 minutes, but that's the point. It arrives before the candle closes. Now, on a 1 minute chart, it's probably not that significant, or a 15-second chart, it has no great significance. But on a 5 minute chart, it certainly does. Because if this came in on 1 minute, which it might well have done, the price might have just collapsed down here, and then in the consequent 3-4 minutes, it's all of this. If that was the case, then that's something you want to know, because as I've said so many times on these webinars, is when you get volatility and you've got a strong position in the market, take most of your profit off the table, because you don't want to sit either through a congestion, and you certainly don't want to sit through a reversal. So if you're trading multiple lots, take most of them off the table. If you've got 3 lots on the table, take 2 off and leave 1 to run. Or alternatively, just close the whole lot out. What does it matter? If this were to continue lower, maybe go sideways and actually continue lower in the trend, downtrend, what have you lost? Okay, you've lost a bit of spread. So what? You've banked a load of profit, you've put that in, and now you're just going to jump back in, and all you've given up is a bit of spread and a bit of commission on the spread, and that's it. So if you're in a strong position and you get a volatility trigger, and it will arrive before the candle closes, so it doesn't matter what time frame you're on, then close out, take your profit off the table, and just wait and be patient, see what happens. Here, for example, we had a volatility trigger. What happened? We went into congestion. No reversal on that case. We've carried on up. The volume's decent under here. Now we've got this huge volatility candle here, ton of volume underneath. We've gone into congestion. Are we going to see a continuation? Quite possibly. Looks as though we're going to carry on higher. And once we start breaking away from here, if you want to continue with the trend high, you jump back in again. Now, by this point, the trend monitor, certainly probably by about this area here, will be transitioning out and coming out away from the red into a darker red and probably out into a brighter blue, and really just confirming that we are now moving into an uptrend scenario. I just wanted to highlight that one because it is such a nice example, particularly the aspect of getting into a trend once it's underway, particularly a downtrend, where you've jumped in if you've missed out. And obviously on here I've got this is a single chart. I haven't got any levels on here. I would have all my accumulation distribution levels on here. I'd have trend monitor on here, I'd have pivots, have volatility, all the rest of it on here, just to give me all that information. And of course, I would be looking at this in multiple time frames, but I just wanted to highlight that because it's such a nice example on that 5 minute time frame. Yeah. Yeah, the Aussie's rising. You can see it here. The Aussie is rising very, very strongly on the, in fact, if I go over onto, let me just hop over onto, in fact, let me go back onto Trading View for a moment, because I've got multiple CSIs here somewhere, I think. Or is that on TradeStation? Sorry, I've got so many. Nope. Where are we? Okay, I'm sure I've got it here somewhere. There we go. Here we go. This is what we've got at the moment. Let's just pull that over. So this is on 3 minute. This is on 5 minute. Just pull that in a little bit tighter as well. And this is on 15. So you can see the strength of that on the Aussie. There we go. Really nice, very strong move. And you're almost spoilt for choice. because you've got at the moment, you've got the CAD that's falling away quite strongly. You've got the Aussie rising very strongly. New Zealand dollar is rising very strongly with it too. So you're really, really spoilt for choice. But Anna's mentioned the Aussie dollar there. Let's just hop over onto Ninja. So let's just drop that out of the way. Just go on to them. What I'm going to do is I'm just going to change this out, change this over to Aussie dollar. There we go. Just wait for that to load. I've got a lot of data coming in, so it's a little bit slow. There we go. And that's what we're seeing right now. And as always, we're using multiple time frames. Just reload that one. There we go. Bit slow on that one, sorry. We're using multiple time frames. Let me go back over here and put it up here, probably quicker. Let's just change it over here. There we go. Let me put the trend monitor on here as well. Where are we? Trend monitor. There we are. 2021. Just put that on there. Put that on the bottom there. But there we go. There we go. It's got some really nice volume coming in here. We've had the volatility. We had a volatility trigger there, but this is what I mean. This would have come in. This is on 5 minutes. I can just see if it's on the 3 minute as well. Let's have a look. Yeah, we had it on 3 minute as well. This is what I mean. This would have triggered. It would have arrived on that particular candle, and if you'd closed out at that point, maybe you'd be sitting in this trade, maybe you're jumping into it. Let's say you're jumping into it. Okay, so we're moving into congestion. Now we're starting to break high. We've got lots of volume coming in here. This is what we expect to see, because not only is volume picking up in terms of the cash markets opening alongside the indices, but it's also opening up here as well. And you will see increases in volume too. Now we're starting to see nice volume coming into the market, driving this higher. But if we go back onto our a multiple currency strength array here, or the currency strength indicator here, the fact that we are, and this is the point I mentioned earlier on, this is only indicative of the fact that we are moving into an overbought or oversold condition. Here, the Aussie dollar is overbought on 3, it's overbought on 5, and it's overbought on 15. Does that mean that it's going to roll over for us and it's going to just fall nicely all the way back down to the bottom, so we're going to get a really nice reversal trade? The answer is at some point it will, but as you can see here, what we tend to get is, there's a lot of flip-flopping around up here, and it's pushing ever higher up into overbought for whatever reason. The indices, whatever the risk sentiment, if risk sentiment is driving it, fine, that is what is driving it. If it's fundamentals, fine, that is what is driving it. But that's where we are at the moment. So it's well into overbought, but it doesn't automatically mean, and likewise down at the bottom here, we've got the CAD. Same scenario. The fact the CAD is moving into oversold, it's in oversold on 5, it's not quite into oversold on 15 here. Does that mean that it's automatically going to revert back to mean? This is a market of pure mean reversion. Currencies will just, you imagine an oscilloscope, if you've ever seen one, with a sine wave, which literally oscillates from high to low and back again. And that's the closest example, analogy that I can think of in terms of a graphic that really describes what goes on with currencies the whole time. It is this constant flow from high to low and back again around a midpoint, a mean, if you like. Now, clearly, if that were the case, the currency value itself would never move. It would just, like an oscilloscope, like a meter, it would stay in the same range. Well, clearly that's not the case. They do move, but then that is the actual fundamental principle of what is going on. It is constantly oscillating around that midpoint. Now, the fact that it is at the top here on these faster time frames from a scalping perspective does not automatically mean that it's going to come down straight away. And the point is that if you like trading reversals, like me, it's one of my primary tactics. I trade reversals. I pay a premium for doing that, because the premium I pay is my stop loss has to be much wider. Instead of setting a let's say as a scalping trader, maybe 4, 5 pips, whatever it may be, 6 pips as an intraday scalping trader on a trade that's already trending quite strongly. Here, I have to wait and be patient. I don't know how long the Aussie is going to sit there for. It could sit there for the next 5 minutes. It could sit there for the next 5 hours. I don't know. And during that period, it is going to oscillate around this area as well. It's going to go up and down, maybe a bit high, could even get up, close to 100 for all I know. But at some point, it has to move because that's what currencies do. So my premium getting into the trade is much higher, but then my reward is much higher because I'm already on the train before it leaves the station. If you're going to wait for the train to leave the station, in the example I was showing you earlier on the Euro CAD, then you have to jump on at that point and you've given up some of that trend already. So I just wanted to make the point, and it's a really nice example with the Aussie, and particularly in relation to the currency strength indicator as well. So I'm going to wrap up there because we're going to move over into indices now. So join us on those two. We've got a couple of webinars coming up in a moment. So thanks very much indeed for this one, and hopefully we will see you again shortly.